Okay, then let's start things off with Apple. Now, I will spend more time on it than any other name in this video, mainly because I keep being asked about it, and because I haven't really examined the chart in several weeks, knowing full well that it's going to make a new high, because that's been my forecast for the last 2 years. Wave 3, Wave 4, and then Wave 5 is underway. Now, I did expect this Wave 2 of 5 to be much deeper. I expected it to come down to about 426 pre-split, which would be around 61. But it bottomed near 70 or 71, retracing only 41.4% of Wave 1 of 5. Okay? Now, that 41.4% retracement is not really an obscure retracement level, and it's not a Fibonacci retracement either. It's really based on Pythagoras' constant, the square root of 2. Remember it, 41.4. It comes up so frequently. All right, so here's another hint for you. Whenever Wave 1 develops as a leading diagonal, and I'm calling it a leading diagonal here because of the converging trend lines, and because Wave 4 overlaps the territory of Waves 1 and 2. Okay, whenever Wave 4 dips inside the territories of Waves 1 and 2, it's automatically a leading diagonal. A lot of people misinterpret this to be Waves 1, 2, and then Waves 1 of 3, Waves 2 of 3, and then Waves 1 of 3 of 3. Let's not go there, all right? What this is it's a wedge in classic chart pattern speak, but it's a leading diagonal in Elliott wave speak. So Wave 1, Wave 2, and then Wave 3 is underway. Whenever Wave 1 unfolds as a diagonal, expect Wave 3 to be a particularly powerful wave. Now, I did draw this fork here, the Andrews pitchfork. I rooted it at the endpoint of Wave 4 and anchored it at the start and end points of Wave 2 of 5. And sure enough, the median line did provide support in early June of this year, and then again in late June, in mid-July, and most recently in early August. And price, which closed above Wave 3's high last week, is about to reach the top of the channel. And if it breaks above it, I wouldn't be surprised, because it would be a testament to the power of this third wave. After all, channels are meant to be broken. Now, there is a bit of resistance here. The upper Bollinger Band, the top of the yellow channel. Then you have a 1.272 relationship with Wave 1 of 5, meaning Wave 3 will reach a size of 1.272, the size of Wave 1. I'm not too concerned about that, because as I said, Wave 3 is going to be a powerful move higher. And a normal third wave would attain a size of 1.618 to 1.764 times the size of Wave 1. So again, if in the coming weeks we reach this area here, 114 to 118, even though it sounds far-fetched today, I wouldn't be surprised. Now, anyways, this is a weekly chart. It could take weeks or months to get there, and then again, it might not. I don't have a crystal ball. Aside from the upper Bollinger Band and the top of the yellow channel, you have this 1.13 extension of the fourth wave. In other words, it's really the 113% retracement of Wave 4. This is Wave 4. The 100% retracement will bring us back to the top of Wave 3, or the starting point of Wave 4. And if you extend it further up by 13%, this is basically the 113% extension, or retracement, I'm sorry, okay? So again, this area is going to be critical, but price needs no permission from a chart analyst to do whatever it wants. I've said this time and time again. We could see a violent breakthrough on the way up to here. If this ends up being a cup and handle, then using some guidelines, I know that at a minimum, we should reach the 1.618 extension of wave 4. Now, wave 4 is basically the depth of the cup, give or take a few points, okay? Or fraction of a point, actually, now that it's split the way it did. All right, so at a minimum, if this ends up being a sign of things to come, expect maybe an upside as high as $129. Okay, that's the 1.618 extension of this fourth wave. 100% target. If this is a cup and handle, knowing that there is no handle yet, the best thing I can do is estimate the upside, the 100% upside, using the left cup lip. And this takes us to the 100% target of 146. All right, look, no one's got a crystal ball again. And any of this, if it ends up being true, it'll be great. But, it all depends on what Apple is doing. All right, no one's going to look at a chart and say, no, I'm going to hold on to my shares because that's what the chart is saying. Well, the chart might end up saying something else a few months or years down the road, just like it did when in September 2012. For now, momentum is behind it in a big way. And so I do expect in the coming days and weeks for this 105, 106 area to pose as resistance, but any good news could blast it higher towards that 115, 118.6 area, okay? This area right here. Now, if it stays within the confines of this channel and trudges along the upper trend line, which I don't believe it's going to, no? Now, if it does that, it would reach this area in 2015, early 2015. I doubt that very much, okay? So anyways, if we do break through, expect 114.63 to 118.60 to be the next target. Now, again, before I move on to another chart of Apple, the monthly chart, in which I'm going to estimate the upside potential of wave 5 using Elliott wave guidelines. Let me remind you what I said, 1.618, which is 128.97, up to 146.43, which is the 100% target, meaning the depth of the cup or the height of the cup multiplied by 2. This here is the height of the cup multiplied by 1.618. All right, so now let's move on to the monthly chart and see what I can surmise from it. And here's the monthly chart. There's quite a bit of information to glean from this chart. For example, in December 2011, we got our first bullish TD price flip. Bullish price flip is a candle that closes higher than the closing price of 4 bars earlier. And if you can get 9 bars to do so, 9 or more, minimum being 9, then you have an uptrend in force. And that's exactly what we got. We got 9, and actually September and October counted as 10 and 11. But the 9th bar in this TD setup series was recorded in August 2012 in conjunction with TD combo cell 13. That was a nice ending, a perfect ending from a technical standpoint. Now look at the September candle. It was indecisive at best because it closed right where it opened, despite the intra-month high that it achieved. But here's something also to notice. Couple of things, actually. On the way down, we never recorded a 9-bar series whereby each closing price is lower than the closing price 4 bars ago, meaning the opposite of this. Okay. So from a monthly perspective, as dramatic as the story was on TV, from a monthly perspective, this was a reflection of lack of momentum to the downside, even though it was cut in half. From a DeMark perspective, there was no TD setup series on the way down. And look where it bottomed. Right at TDST support, meaning the lowest low within this 9-bar series. Okay, the lowest low within this 9-bar series, 1 through 9. Okay, that was also a perfect ending to a 4. And now what do we have? A nice formation. There is more information to glean from this, so let's go ahead and continue on with this analysis. The next thing to deduce from this chart is this TD setup series that began in April of this year. So a bullish price flip right here, and the current month, August 2014, is bar number 5. So we have 4 more bars to reach 9. If we can get 4 more consecutive bars whereby each close is higher than the close of 4 bars ago, then by December we'll be on bar number 9. From an Elliott wave perspective, last week's all-time high practically confirmed that Apple is tracing out a 5th wave of the largest degree of trend. Now, no one knows how high wave 5 will reach. Anyone who claims to know so is lying and scamming. But we can use fancy Fibonacci math to guesstimate the upside potential, something to look forward to. And for that, one guideline that I like to use, and I use consistently, is to measure the total distance from the start point of wave 1 to the end point of wave 3. In this case, because I'm looking at the entire picture here, I started at 0 because every company begins at 0. And so the starting point of wave 1 is 0. 0 up to the top of wave 3. You multiply this distance by 61.8% and you project it from the endpoint of wave 4. And you repeat the same process using 76.4%. Total distance from the start point of wave 1 to the end point of wave 3, multiply it by 76.4% and project it from the bottom of wave 4. And you get 2 results, 117.21 and 131.91. Does this make sense? Well, I don't know. I don't know what the future holds for Apple, but as long as innovation and creativity are alive and well, and growth is intact, then the future is probably bright. But let me stick to the chart. Let me draw a potential channel by connecting the endpoints of waves 2 and 4. Let me extend this out into the future and color it in orange. And then the top of this potential channel would be a parallel line drawn across the endpoint of wave 3. What's interesting is the intersection of this yellow line with this critical area here, my preferred area. Okay? Well, that's one potential ending right here, a Fibonacci ending coinciding with the top of the channel. But if Apple continues to advance and somehow reaches the top of this channel and then pulls back, and we know that this channel is being acknowledged. Price is acknowledging the presence of this channel. What else can we glean from this chart? Well, let me take you back to the weekly time frame for a moment. You recall this chart, right? We identified wave 1 of 5 as being this leading diagonal, followed by wave 2 of 41.4% retracement. And then I said, given that wave 1 of 5 is a leading diagonal, except an especially powerful wave 3. Now, a powerful wave 3, in my opinion, is one that should at least, at a minimum, reach a size of 1.618 to 1.764, the size of wave 1. Okay? Takes the size of wave 1, multiply it by 1.618 to 1.764, and projected from the low of wave 2. And we should get to this area, 115 to 118, 119. That's what I expect wave 3 to reach at a minimum. And this, in my opinion, is a normal wave 3, not even a powerful one. All right, so let me go back to the monthly chart. Personally, I believe that wave 3 will continue on higher until it reaches the top of the channel. So, in other words, it could achieve a size close to 2 times the size of wave 1, or it could trudge higher, latch on to this yellow trend line and continue on higher by way of backing and filling until it reaches this area. Who knows? No one really knows how powerful this wave is going to be. But I do expect that at a minimum, when all is said and done, we're going to reach either this zone or even the 100% target of this nice looking base, a cup without a handle. So far it doesn't have a handle. All right, let's see if we can get more clues. Now, by the way, I'm starting to get this weird feeling that maybe I'm overanalyzing Apple. And whenever I feel this way, it usually means that my analysis is probably approaching a point of diminishing returns. Now, we're not there yet, but I will certainly stop when we do get there. In this last section, I'm going to use some Gann angles to analyze this third wave and then again this fifth wave. Now, as far as the third wave, I'm going to use 2 Gann angles, the 1x1 and the 2x1. The 1x1 is this dark line right here. 1x1 means that for every 1 unit of time, price is gaining 1 unit itself. And the blue line means that for every 1 unit of time, price is gaining 2 units. 2x1. That's what 2x1 means. 2 units of price for every 1 unit of time. Now, interestingly, price vacillated in between those 2 angles, ran into it early on. It latched onto it early on in wave 3, and then occasionally retraced down to the 1x1 angle or that black line, the 15 EMA, which I usually use as my short-term trend indicator on all time frames. But what's interesting is this. In early March 2012, price ran into the 2x1 angle and was repelled. And then again in April 2012. And then it sold off. When was that? In May 2012. And once again made another attempt at the angle. It hit it right on the head in early August 2012. And then once again, that was the final time, in September 2012. So that was a very reliable guide insofar where to book profits, where to short it. That 2x1 was really something that kept whoever was following it out of trouble. Now let's see what we can get from Gann angles as far as the current wave is concerned. Let me turn off these two and draw new ones from this important pivot point, the low of wave 4. In particular, I want to turn on the 2x1, the 3x1, and the 4x1 angles. Now, as a reminder, what does, say, the 3x1 angle mean? It means that for every 1 unit of time, price is gaining 3 units. 3 units of price for every 1 unit of time. And, at this point, I don't know which angle will end up being the angle. Here's what I'm looking for. I'm looking for where wave 3 is going to end. And I know wave 3 has ended when the subsequent pullback retraces something like 38.2% of this third wave, or 23.6%. Something notable on the chart, just like what happened here. We ran into the 2x1 angle, pulled back to retrace a substantial portion of this 5-wave move right here. See this? It's got the 5-wave look. Something like that. So we retraced a substantial portion of this powerful third wave within this larger degree third wave. Right? So something like this is what I'm really looking for. And it's too early at this point to tell which Gann angle is going to be it. And say that we continue on higher into next month. We'll run into this area, pull back a little bit, and then go on the attack again. We'll reach this important milestone, the 61.8% projection, in concert with the 3x1 line. If we reach this area, say in November, and then pull back by 30 or 40% of wave 3, of course, then we know that the 3x1 angle is the angle to keep an eye on. And then following this this pullback in wave 4, then we'll be on the lookout for wave 5, which will, or might, we don't know at all what it's going to do. It might run into the top of the channel in concert with the 3x1 angle, maybe in early 2015. So now I'm starting to really feel that I have reached a point of diminishing returns, because that's really all I have to say. We're going to watch the 3x1 angle to see whether it is the angle to keep. We're going to watch these Fibonacci projection and extension areas. We're going to watch the orange parallel trend channel, and we're going to keep a tab on the DeMark exhaustion count, which this month will be at number 5, candle number 5 of a potential 9. All right, with that, I'm going to end my analysis of Apple, and hopefully I will revisit it sometime next month. Have a great weekend.